The broadcast is now starting. All attendees are in listen-only mode.
Good evening. My name is Cheryl Patterson. I'm the president of the DC chapter, and welcome to the March 2024 edition of Digging into the BI. This is where members from the Maryland and DC regional chapters get together and look at the latest issue of the BI magazine. Here are the four stocks. Excuse me?
Cheryl, we don't see your screen.
Ooh. How's that?
Now we can see your screen. You're good to go.
Thank you. Sorry about that. Here are the four stocks that we will be looking at: Intel, Vertex, Pulte Group, and Marietta. And this is the standard Better Investing disclaimer. The information in this presentation is for educational purposes only, and investors should conduct their own review and analysis of any company. Stocks discussed may be in our personal portfolio, and we'll try to alert you if this is the case. And presenters are neither endorsing nor promoting the use of any websites, products, or services that we might mention. Now, this webinar is being recorded and should be available on YouTube sometime in the near future. I see many of our BI community out there in the audience, but since this presentation is going out on YouTube, those of you who may be unfamiliar with our organization, here is who we are: betterinvesting.org. BI is an investment education organization focused on long-term fundamental investing. The bold title at the top of the page is a hyperlink, as are many other hyperlinks that we will come across, that will take you to the Better Investing webpage. If you download the handouts and you see things in bold blue underlined print, those are hyperlinks that if you hold down the control button and right-click, will take you an area with more detail on that subject. Currently, we only have one handout down, but we will be loading some others shortly. This is where we are on YouTube. Let's see. Here we go. This is where we are on YouTube with the hyperlink web address. We're trying to slowly grow our universe. So if you haven't already done so, please like us and subscribe, and also share this with family and friends. That's how the logarithm works to attract more visitors to the website. The one thing to understand about videos on YouTube is that they are organized into chapters with little breaks between each one, so you can fast forward to an area. If you want to focus your attention on one part of the stock presentation, this is a quick way to do it. For those that are having trouble with your audio, like we had last month, look at the help icon, which is that globe on your control menu. For those that are having problems, check your audio settings. Most of us are on our computers, so check your computer speakers to make sure they're not muted or turned way down. And since the copy in YouTube does match the handouts, be sure to download before the end of the program. You'll have 4 completed SSGs as well as the complete slide deck, and go ahead, share them with whomever you like. So why are we doing this? Because we think this is a great way to show people our approach to investing and a way to connect with the Better Investing community. If you're not already a member, you can use the hyperlink at the top of the page to get a free 90-day trial. If you have someone in your club that's not yet a member, share this offer with them. You don't have to be a member of the Mid-Atlantic area chapters to attend this or any other events put on by our chapters. But we're here tonight to promote events offered by the Mid-Atlantic chapters, including our 2 model clubs. Also, if you are an individual investor or club in this area, there's a new program that I will discuss in more detail here tonight. We want to show you all the resources you already receive with your BI membership. In just over an hour, we're going to have 4 stocks that come from the BI community, 2 of which are presentations from the BI magazine, which is for members only. And that is the monthly stock to study and the monthly undervalued feature. 2 presentations from the BI website, BI magazine, can be a personal experience that you know of or use the product, or a first cut, online screening tools, the ticker heat map, ticker talk, bi-weekly screen, the growth stock column, international stock column, and the BI top 100. Please take a moment when you're going through the website to become experienced with these different products that do come with your membership. If you just sign in on the homepage of Better Investing and go to About Us and News Releases, you can see the listing of tonight's stock to study, as well as the undervalued stock that was announced 2 months ago, as well as the next issue stock picks of NXP Semiconductors, NV, as the stock to study, and Comcast as the undervalued stock. For those of you that are already members and receiving these announcements, you can always change your profile by clicking on the My Account to the right of your name, update, and save any changes. If you reside in Virginia, DC, or Montgomery County, Maryland, you will get your local news from the DC regional chapter. Those living in the rest of Maryland will get their local news from the Maryland chapter. Go to My Account, which is underlined in red, and then to email and product subscription information circled in green, and that will open up the big green box on the right. Then click on the box to the left of local chapter news and events. But before you save your changes, look at the highlighted area that talks about weekly newsletters, which is about midway, which I suggest you sign up for on this page. And let's go to the next slide to see. Here's what BI weekly newsletter looks like, and it is just for members. Once you sign up, you will get a weekly email that comes out toward the end of each Thursday and features events happening in our larger community within the next several days. If you sign up for it and you don't get it, you should check your spam folder. Here are some of the things that are coming up. We have the Stock Up presentation on the 16th of March. This is from 8 to 9:15 Eastern Standard Time, and they have several ideas which they're going to present within that Stock Up. You have some stock ideas for large companies, and you have a learning center. So these are things that check out this weekly newsletter, because it really gives you lots of times some really good stock ideas for you and your club members, or as an individual investor that you can study. We're also up on Facebook. We've most recently put up stuff that is MICDC, that is from the DC regional chapter. You can share this with people outside our community that want to know more about long-term fundamental investing. On the third Tuesday of the month, the DC chapter hosts Money Matters book discussion from 7:30 to 9 p.m. We have a list of book suggestions on investing and finance that a person in our community reads and then leads a discussion. Some of the leaders have written notes on the book and then share these notes with the rest of the group that may or may not have read the book prior to the discussion. but the notes are not mandatory. Lately, the lead person has suggested interesting pre-recorded discussions by authorities in the field that have sparked some interesting comments. The next month's read is Nudge by Richard Thaler and Stan Sustein. Again, please join us. And from the Maryland chapter, we have the Destiny Investment Club. This was started in 2001. It has 9 partners. The next meeting will be on March the 15th, the 3rd Friday of the month. And we start at 6:30 p.m. to 9 p.m. You can reach us online, and you can also look to see what our education and our stock studies, which have yet to be determined. And if you want to send an email, here is the point of contact. Here's a picture of us at our last event.
Cheryl, before we go to this one, we wanted to also let Cynthia tell us about her club that's also in the Maryland chapter, In the Black. So Cynthia, we don't have a slide for it, but go ahead and tell us a little bit about your club.
Awesome. My name is Cynthia Williams. We are In the Black Investment Club. We are online only. So we have a total of seven partners currently, and we span between Virginia, Maryland, and New York. We meet 7:30 to 9 p.m. on the 2nd Sunday of the month, and our next meeting is the 11th of March. I believe that's Sunday. And currently our education and stock study are to be determined. We haven't determined it and announced it just yet. Again, we're online, and I believe my information to come up later. If not, I'll make sure you have it. I am the contact person. And again, we are online only with 7 members, looking for more.
Yeah, it's Sunday's the 10th.
The 10th. So the 10th, March the 10th.
Thank you, Cynthia.
Thank you for the correction.
Kevin, you want to talk about MCMC?
No, Armida can do it. Armida?
Oh, that's right. Sorry.
All right, Kevin. I'm representing 2 clubs tonight. Montgomery County Model Investment Club, which is as I mentioned, a model club. We meet the 3rd Wednesday of every month from 7 to 9 p.m. online. For this month, our education is going to be the attributes of compounding part 2, and our stock study is going to be casinos, gaming, and electric gaming. I'm not quite sure what that stock is going to be. Do you know what it is going to be yet, Kevin?
No, I don't.
Okay.
It's just in this industry. It looked really interesting. So.
All right. All right. Now, a point of contact, if you want to get in touch with anyone at the Model Investment Club, is here listed, mcmc@dc.betterinvesting.net. And the picture on the right is a picture of our 2 clubs, both the Montgomery County Model Club and also Pinnacle Group Investment Club, which I'm also a member of. And what we do is we try to meet quarterly, face to face. Our club decided that we wanted to see each other in person a little bit more often. And so Pinnacle Group actually meets the Saturday every month. So
let's go to the next slide. We have one for you there on Pinnacle. There we go. Same people.
Okay. Okay. We meet the 2nd Saturday of every month, March 9th. This is Saturday from 10 a.m. to 1 p.m. We currently have 8 partners. And for those of you who are interested, we will be meeting in person this coming Saturday. So if you'd like to join us, please let me know. Our education is we're working on learning how to do, I can't remember what the name of it is. It's where you do the stock study and then submit it to Better Investing. And
the first cuts?
First cut, yes, thank you. First cut stocks studies. And also our stock to study, I'm not quite sure what that is either. So I'll have to check with the group, but we always have a good time, and we invite you all to come and join us.
Well, thank you, Armida. This is the DC Regional Chapter. I'm a member of this club and has Happy Destiny with Kevin and Susan. It was started in 2008. We currently have 13 partners about to adopt our 14th. The next meeting will be March 12th, which is the second Tuesday of the month, and we meet only online, and there's the link, from 7 to 9 p.m. Could somebody mute themselves? There's a lot of noise in the background. The education is going to be investment ratios. Stock to study is Addis Home Care, ADUS, and there's a point of contact email if you have questions. And we are open to visitors, as are all of the above clubs. Greg, can you tell us about your club?
Absolutely. It's the Washington Metro Investment Club. We are a club in the Metro Washington area with members in DC, Maryland, and Virginia, and sometimes on the outskirts. I'm actually in Rochester, New York. Started in 1992. We have 40 partners, including 5 student partners. Our next meeting is March 16th, and we usually meet on the third Saturday every month between 3 and 5. It's online and in person. We meet in person in Manassas, and stock to study for March, I do not know.
Alrighty, and you've got a point of contact there in case someone has questions that they want to email you.
Absolutely. Albert Stewart at stewfam88@comcast.net.
All right. Well, thank you very much, Greg. Glad to have you. There is a new program out there called Club Connect, and this is for BI members, BI clubs, and people that are on the free 90-day membership program. It started in this past September, and it's designed to be a bit more proactive than the previous program in connecting clubs with potential partners, and also for BI members looking for some clubs to join. Still, the decision to join a club or not, as well as accept a new partner or not, remains between the club and the potential new partner. So look it up if you are looking for a club or if you're looking for members. Well, this is where you can find BI Magazine. We're looking at the March 2024 issue. And if you don't want to wait for the post office, you can look at it online, either from a computer or your tablet or your smartphone or any other electronic device that you can reach out on. There is an app that you can download. You have to have a separate password for the one that you use for the website on usually, and then you can just look into it, and we'll show you how to get there on the next slide. So if you go to the Learning Center, BI Magazine, and you look at the magazine issues and view the details, you can take a look and see, you can see the green link arrow there is for Better Investing Magazine for mobile devices, and the red arrow leads you to the analyst reports and other resources. So this is the cover story. We like to usually highlight at least one story within the current magazine. Matt Mondau is a CFA, a CFP, and a CMT. So if you look on page 39, you will see this article on a healthy balance, which is the market's top indices aren't as diversified as you think. And he's in one of the paragraphs out of there is the S&P 500 has rarely ever been as concentrated as it is today, both at a sector and individual company level. So again, on the BI Magazine, you can go to different pages and look up different things. Investor events column on this issue is on page 51 as compiled by the BIHQ. There is a meeting, a live meeting, Doug Gerlach, back by popular demand, hosted by the Northeast Ohio chapter. The cost is $20 and it is online. And it is Saturday, March the 9th from 10 a.m. to noon Eastern time. Also, there is a credit market series that you can get reading credit for, analysis reports hosted by the South Florida chapter, also online. It's free and it is offered on Monday, March 11th from 7:30 p.m. to 8:30 p.m., also Eastern time. And those are usually the annual meetings and investor events that are toward the back of the magazine. All right, let's get started. We have got two presentations here that are going to be using the core SSG. The first one is Intel Corporation, offered by Greg Ewing, the Club Stock Watcher, and the second one will be Vertex Pharma. VRTX is the ticker by Cynthia Williams. And this is the BI stock to study for March of 2024. These featured companies can be found in the latest issues of the BI magazine at the website. So take it away, Greg.
Okay, thank you very, very much. So I'm doing Intel. Again, I represent the Washington Metro Investment Club. Next slide, please. So Intel, or Integrated Electronics, was founded in 1968 by pioneers Gordon Moore of Moore's Law, Robert Noyce, and Arthur Rock. And so, as we all know, they're the leading digital chip maker of microprocessors for the global personal computer. They were a prime component of Moore's Law, not surprisingly, since he's a founder of Intel. And they're expanding into new markets, including communications, automotive, the Internet of Things, AI, and machine learning. Next slide, please. So their capital and associated investments is one, they want to strategically invest in the right things. They want to develop their intellectual property so they're poised for next generation needs. They manufacture globally, geographically balanced manufacturing plants, and they want to have talented employees so they can develop the solutions. They also collaborate with stakeholders to make sure they're in touch with like corporate community needs as well. And then they want to mitigate climate and water impacts, so they want to be a good eco-neighbor as well. Next slide, please. So as you see, the locations across the globe, their headquarters are in Washington State, but they have manufacturings in parts of Asia, Poland, Inland, Ireland, Israel, and of course, other places. So they are diverse in terms of the manufacturing, and I'm sure it helps them control their costs as well. Next slide. So we talked a little bit about Moore's Law. There's Mr. Moore over there on the side, and basically the law states that the number of transistors in an integrated circuit doubles about every 2 years, while the cost of computers continue to decrease. And so Intel aspires to have a trillion transistors by 2030 through a variety of strategies and technologies. So they are very invested in this particular law, this concept. Next slide. So let's look at their financial summary. So this year they did 54.2 million, or their 2023 compared to 61.1. So they suffered a loss there. In fact, all of these things are losses, to be quite honest. And their gross margin dropped from 43% in terms of GAAP numbers to 40%. Their diluted earnings per share dropped from $1.94 to 40 cents on GAAP. And then their cash flows dropped from 15.4 billion to a negative 4.1 billion in GAAP. And when you look at their non-GAAP for cash flow, it dropped close to $12 billion compared to almost 12 billion. So it was like 100% like reduction. So they really had a tough year in 2023. Next slide, please. So where does their revenue come from, since they're a diverse company? Well, their primary revenue comes from client computing services, which is about 54% of their revenue. Next is their data center, which is about 35%, and then is their networking and edge, which is about 11%. Then their mobile eye, which is about 4%, and then last is their foundry services, which is about 1%. So we look at by and large, customer revenue from client customer services almost doubles the closest competitor and within the company. Next slide, please. So when we break it down, like what kind of trends are we looking at over the last couple of years, we notice that we've seen a continued decline in pretty much the first three markets, although the biggest hit, of course, was client computing services. We see lesser declines in data center and AI, and we see smaller declines in networking and edge. But we also actually see growth in Mobileye, which is their technology they're developing for self-driving cars, and then their Intel foundry services. Next slide, please. When we look at their operating income, we actually see an increase in client services in 2023 compared to 2022. We continue to see losses in the others, but we do see an increase in Mobileye, again, their self-driving car. So all in all, the company is beginning to turn around in terms of its performance. And then when we look at Q4 operating highlights, they're saying that 15.8 billion, which is up 10% over year over year, 48.8 gross margin, of 5 percentage points over their October outlook, and then 54 cents earnings per share, which is up 260% year over year, and 10% above their October outlook. So the company seems to be trending upward. Next slide, please. So when we look at, well, what is the Q4 numbers compared to previous year, we see that, certainly significant growth in client customer computing. We see that they were relatively flat in data center and AI, about, kind of flat in network and edge. We saw an increase in Mobileye, and we also saw an increase in their Intel foundry services. Next slide, please. So, but when we look at the profits, we saw a significant increase in profit in client services compared to 2022. They were even in data center, they didn't show zero profit in network and edge, but we saw an increase in Mobileye, and we saw a decreased loss in Intel foundry services. So, but all in all, when you look at like the significant profit, like operating income comparisons to client services versus some of the losses that they experienced in the other markets, the company did very well, and it appears as if they're riding the ship and coming out of that tailspin that they were in the last couple of years. Next slide, please. So here's kind of where their income was from 2024 to 2023. Intel is the high color on the highest color. You notice that they were going up, and then there was a dip. When you look at the next color below, which is a darker blue, that is the industry average. You notice that their numbers kind of compare with the industry average. So that's the good news. The bad news is that you have broadband, which is the next line below it, and then ST Microelectronics, which is the gray band. They are both eking upwards. So, the competition is beginning to catch up. And then there's a new player in town, I think it's Arcadia, and they're doing very, very well. Next slide, please.
5 minutes, sorry, 5 minutes.
Okay, no problem. So so managed pre-tax income, when we look at the green boxes, that's to demonstrate that's when they begin to take their slide. And so we look at their 5-year average is pre-tax is 21.4. And so we know that's low when we go early to the other numbers. Next slide, please. So here we go. This is kind of looks like the numbers are all over the place in terms of like the diagrams. Historic growth is 1.7, estimated growth is 8%, and historic earnings per share is -6%. But estimated future growth per share growth about 65%. So next slide, please. So this is kind of like the current gives you the price earnings projection. The current price earnings ratio is 111.5. Average price earnings ratio was 30%. The high as the closing was 43.82 in terms of share price, with a 52-week high of 51.28 and a 24 low of about $25. Next slide, please. So when we go into a 5-year risk and rewards, we look at basically we're thinking that the low might be around $33, and we look at like earnings per share, which what's reasonable basically it comes out to a hold because the present price is 43.49. The hold range is 43 to $75, and so it's a good stock, and I believe it's going to go up, but it's not. It's basically most of the analysts are saying hold, with a few are saying that it's a buy. Next slide, please. So 5-year forecast is that, they're predicting, well, based on my guesstimates, we're looking at average PE ratio of 4.7 with a high PE of 4.3, looking at a compound annual return of about 18.3%, and an annualized rate of return of 20.2. And then with the last slide, I believe, next slide, please, is the outlook of this slide before that. Actually, this is correct. So there's for the, no, that's correct slide, I'm sorry. The revenue projections between 12 and 13 billion. This is a Q1 estimates. So again, they're anticipating sales increases, gross margin increases, and earnings per share increases. And then finally, I believe this is my last slide. Next slide, please. So it closed up, and so it looks very positive. Zacks consensus thinks that they're going to do very well this year. Analysts predicting 90 cents per share in the upcoming quarter. But despite the improvements, the financial consensus is to hold. Thank you. That's it for me.
Greg, just a moment. Greg, can you send me over your completed SSG so I can put it up on the list for everyone?
Absolutely.
And same with you, Susan. You guys can talk to me offline. Thank you. Back to you, Cheryl.
All righty. Cynthia Williams will be up next talking to Vertex Pharmaceuticals, which is the stock to study for this month. Take it away, Cynthia.
Thank you, Cheryl. Good evening, everyone. My name is Cynthia Williams. I'm doing Vertex, and this, again, is the stock to study, as Cheryl stated. Just a little bit before we go to the next, I'm going to just share with you that so Vertex Pharmaceuticals is a medium-sized company. It's in the biotechnology industry under healthcare. This is a grade A. And just to let you know that their fiscal year ends 12/20/23. So we'll go to the next slide. Where I found this particular presentation, again, the stock to study, just to show those who are not familiar with our presentations in the stock to study, but you can go onto our website, Better Investing. You can find it on the home page, midway down, Better Investing Magazine, or you can go lower, the Better Investing Magazine, click on the current magazine, and it'll bring up March 2024 where we are now, and it is on page 17 in the magazine. Next slide, please. Just wanted to show some numbers for Vertex Pharmaceutical. This was exciting for me. I actually gave pushback when it was selected, and I was selected to do it. I usually stay away from pharmaceuticals because of the long words and the many letters. It's just hard to pronounce, but I know that our colleague Jonathan Hunt used to always do Regeneron, and I really took to that. So this one was interesting. But anyway, here are the numbers. If you look to the far, the middle where it says Q4 22 and FY 22, just to see the numbers where they are now, 2.3 billion. If you jump at, and in the fiscal year was 88.9 billion. And if you look at Q4 23 and fiscal year 23 at the end for the total revenues from 2.5 to 9.8. Just wanted to show you the increase as we talk through the slide deck tonight. Next slide, please. Awesome. One of their therapies, if you will, that's given them go. One of the things to look forward to is called Casgevy. This here is what one of the therapies and treatments that's going to catapult them to the next, just to start you there. But before we change it, I do want to share with you what Vertex Pharmaceuticals is known for. It is known for their discoveries and treatments around messing up my wording, cystic fibrosis. So, and they are known for four treatments spanning over a little over 11 years now, from starting in 2012 with Calideco, 2015 was Orkambi, and then 2018 they had Symdeco, and then in 2019 came Trikafta. So these four together are their their key treatments for cystic fibrosis, and that's what they're mainly known for. I did want to put that out in the beginning as well. But on comes some more. They do have a lot of milestones in their pipeline to look forward to from phase 1, 2, 3 up to phase 4 of their process. But this is one of them, and I just wanted to bring that up because I saw this on their slide deck, and I saw it on actually a report on them. So Lester Hall is actually speaking about them. Next slide, please. Here, I like to point out, I know we want to, what are the downfalls, but I'm always talking about the goods and the positives. So I wanted to share where they stand now, some of the highlights that they point out. It's small print, hopefully you can see it. I don't want to read through all of them, but just wanted to list that and then also take those current highlights into where they're going, their anticipated milestones to go to look at it just on the other side of the page to see where these are going. Just to give you an example, they have VX 500s up to 900s also for their acute pain. Treatments are coming into play. They've been approved, and then it tells you where and when it's going to potentially launch. So I thought this was a very interesting slide and wanted to bring that to everyone's attention too. Next slide, please. All right, let's jump into the SSG core. Just here, I want to just kind of bring out I usually go to step 3 when I do a presentation to show you both the sales and the history of the sales and EPS and their growth on the scale, of course, and of course with the chart at the bottom for the numbers. If you notice, just look at the numbers over years, a 10-year history, how the numbers are steadily increasing. And both, again, with the sales and EPS. Up in the right-hand corner, I usually use an average try to help me when I try to determine what forecast to put in there. So I usually pull 3 to 4 analysts, and what I also use what's in the SSG, and I chart it, and then I take the average, and I look at the average, and then from what I read and research, am I comfortable with those numbers? So I did, and I was at this point comfortable with, if you look at the end, the averages for the sales percentage came up to 10.8. So I went with the 11, and then for the EPS percentage at 26.0, I went with 25, just being conservative and relaxed, I guess, if you will. Next slide, please. Just remember those numbers, the 11 and the 25. You'll see them again going forward. Just wanted to bring out the peers here. This again isn't, I put plus, but it's core. So this isn't core. I went and looked at the, excuse me, the competitors. Again, I wanted to put Regeneron in there. They had other ones in the system, but I changed it. They did have Bristol Myers was in there, and then Moderna. So with those, what I did was kind of point out and highlight some of the numbers with the standards that we look at for pre-tax profits, 10 to 15 and above, I believe. We have for the return on equity, we want a good 15 and up number, and then for debt to capital, we want to make sure we stay below 30. So if you look at Vertex, we're at 42 for pre-tax profit. I think those numbers are great. The average of the numbers are great. They stay steadily up and higher than what our standard is. And then the next closest is Regeneron, but if you look at the industry peer, the industry average and the peer, we're well above that as well. Under return on equity, we're looking what, 30, 15 and above are good numbers. Look at the numbers for both Regeneron and Vertex, 26, 25. I think we're doing good there, and we're very close, knocking on the door of the industry and the peer group average. Down below for debt to capital, DTC, Vertex is at 7.7, Regeneron, Moderna actually is at 7.6, so we're close there with Moderna. However, the industry average peer and Regeneron is at 11.6. Just wanted to kind of highlight those in the peer group so you can see when you do go into core and pull up your competitors. Try to pull up some you're familiar with that's in that particular industry and or sector. Next slide, please. All right, here again at 11 that I forecast in the 25, just wanted to show again here on this slide when I did my valuations for my high price and low price. I did go with the 5-year average P of 25.1 on both, yielding for the high 1,064 and for the low 348.6. Next slide, please. The potential gain and loss, when we look at the 3-to-1, and what would standard being 3-to-1, this came in at 7.5 to 1 with the numbers that I put in. Again, I was very conservative, very relaxed, wasn't risk taking at all. But this is the numbers and what came out for our potential 5-year. Our 5-year potential, again, it falls into the buy zone at the current price at 432.8. The low I forecasted for 348 and the high being $1,000. Next slide, please. Overall, Vertex is a medium-sized steady growth company. It's really exploratory what they have coming on, but we'll be safe. It also is a well-managed company. If you saw the debt was low. It was low. Yeah, it was very low. It was 7.7. And then also it's an overvalued, trading above its 5-year high. PE, it is a worthy candidate to consider adding to your watch list, in my opinion, and or a buy if you're looking to add a pharmaceutical company to your portfolio. I was gung-ho about Regeneron, but I am even more so now. I'm glad this was a stock to study. I'm glad I was assigned to it, and I want to read more on it. Vertex is the buy below 527.4 to satisfy the 15% total return of a 3-to-1. Next slide. And next person.
And next up is Aramita, who's going to be doing Martin Marietta Materials. Take it away, Aramita.
Thank you. My name is Aramita Watson. I'm going to be doing a presentation on Martin Marietta Materials, which is a spinoff from Martin Marietta, which I'm sure many of you are familiar with. Next slide. Okay. Next slide. No, something's off, guys. Previous slide, please. It's not my first slide. Okay. Anyway, Martin Marietta Materials, symbols MLM. It's the Better Investing 2024 undervalued stock. Also on that slide should have been the price of the stock, which today was $589.95, which is up from when I, about $40 or $50 from when I previewed the stock about 2 weeks ago. All right, next slide. Let's talk about the industry in which Martin Marietta Materials exists. It is in the construction materials industry, which consists of a variety of companies. As you can see on the right-hand side, these are a number of companies within construction materials, and these companies actually operate in residential home building markets, commercial and industrial construction, cement and aggregates arena. So you can see it's quite wide and quite diverse. This industry is also very cyclical, as well as being heavily correlated to the current global economic climate. And most of the revenues for these companies is largely through individual consumers, domestic and international construction companies, as well as local and state governments. And the way these companies generally grow is through acquisitions, tuck-ins, divestments of non-core assets, and to strengthen, to further strengthen their business model. And this particular industry is poised to benefit from the infrastructure spending and the new home shortage. Next slide. Okay, looking at Martin Marietta Materials, why is it a BI undervalued stock? Well, one reason for interest is the fact that recently the U.S. government approved the U.S. Infrastructure Investment and Jobs Act of 2021, where they allocated over $1.2 trillion over the next 5 years through 2026 for improving infrastructure. This company is a leading provider of aggregate, sand, gravel, crust,
Muted.
and asphalt, which would, and other construction materials would be used in building the infrastructure. The American Society of Civil Engineers in 2021 estimated that the country now needs to spend at least $5.9 trillion on infrastructure improvements throughout the next decade. So that still leaves us with around, somewhere around $4.7 trillion of infrastructure work that still needs to be done outside of the Infrastructure Investment and Jobs Act. And so this company also is very strong because it's a narrow moat business. And also it's been a long time value creator where they've been able to grow revenues from $2 billion in 2013 to nearly $7 billion in 2023, mostly driven through M&A growth, through pricing power, by massive increases in margins from low double digits to about 25% of sales. And they've also been able to keep their the number of shares outstanding relatively stable. Next slide. Now, this particular company is very diversified. Matter of fact, they have over 300 different aggregates, quarries, mines, and yards throughout the country. And they particularly focus on aggregate cement, asphalt, and ready cement mix. They employ over 10,000 workers throughout the United States. This particular business, as I said a little earlier, is quite lucrative because just this past year, the business was able to generate at least $6.8 billion in sales. That's just over $2 billion in earnings and over $1 billion in net earnings for continuing operations. And what they've decided to do is to focus on aggregate cement and some magnesium specialties because they feel that within the business, they've been able to benefit particularly from greater domestic manufacturing, particularly focusing on energy as well as building data centers. And also the greater margins have been supported by the fact that many of these resources that they use are diminishing. And also you have limited substitute products, meaning you can't go out and find these products anyplace else and substitute something for them. And also this particular industry has a very high barrier to entry. And these products also make up a very small fraction of the local cost of the total cost of construction. Next slide. This particular company has a business strategy where they feel that they have a uniquely positioned aggregate-led growth platform, whereby they're placing most emphasis of their business on their upstream building products, mainly their aggregates and their strategic cement. Matter of fact, when it comes to aggregates, they're one and number two in 90% of the markets in the United States. And also they have what they call targeted downstream products, which is the ready mix cement, as well as the asphalt paving. And also I told you about their magnesium specialties, which they seem to have a particular niche in. Next slide. Through this business strategy that Martin Marietta has chosen, they truly have been able to show that they are best in class in terms of growth, in terms of revenues, earnings, and total shareholder returns. This particular slide I'm showing you is from 2005 to 2020, and you can see significant growth has occurred over time in these areas. Next slide. Next slide, please. Thank you. Also, they feel that they have what they consider a value proposition in terms of these building materials and the supply chain, because they really feel that, particularly with their upstream products, their aggregates and cement, they feel that they have the ability to really control the pricing throughout whatever economic cycle we happen to be going through, because again, they're depleting natural resource and also limited substitute products. So they can pretty much charge whatever they need to charge to increase their margins. And this also is true for both their downstream products and in terms of their asphalt and their ready mix concrete. Also in terms of the cement, generally the demand exceeds the capacity for which they're able to produce it. All right, next slide. The company has a management growth strategy called SOAR, and it stands for Strategic Operating Analysis and Review. And they've been operating under this management strategy for probably about 10 years. And basically, they're focused on safe operations, environmental stewardship, employee well-being, community well-being, platform for growth, commercial and operational excellence, and capital allocation. And they feel by focusing on these areas, it's really helping them to expand the margins within the company. Next slide. These are the action items in which the company has identified in terms of their strategy for the next 5 years. And the purpose of this is to drive particularly their profitable materials growth at the same time while maximizing shareholder value. And they're going to do this through organic growth, inorganic growth, and through portfolio optimization. With the organic growth, they're going to look at growing their capital investments, increasing their commercial excellence, and also their operational excellence. These are items we talked about on the previous slide. In terms of inorganic growth, we're talking about bolt-on acquisitions. What companies can they buy to enhance the business and increase their? Also, they're looking at market expansion. Where in the country can they look at opening new plants or buying companies to expand their market? Also, we're talking about portfolio optimization, where they do asset swaps or sell companies that are no longer supporting the management strategy, and also monetizing surplus monies and excess land that they might have. Next slide.
5 minutes, Armida, 5 minutes.
Thank you. All right. Also, they're looking to responsibly grow their business for long-term success in terms of operational excellence, commercial excellence, and growth and capital investments, which we talked about before. And this particular slide shows in some of those areas where they're going to be able to do this. All right. Next slide. So it's these three areas, again, through acquisitions, organic capital investment, and return to cash to shareholder values, where they feel that if they use a balanced approach, they can continue to have the long-standing capital allocation and margin increases they've been able to inject into the business. Next slide. What makes this particular market attractive? As we talked about before, they've got high barriers of entry in terms of protecting the location, protects the location advantage. They've got market structure, which drives margin performance. They've got a superior financial position, which supports the infrastructure. In terms of employment and population growth, which drives the per capita heavy side building materials consumption. You've got population density, which of course strengthens your economic and market stability. And you've got business and employment diversity, which supports the public infrastructure spending. Next slide. Strengths, weaknesses, opportunities, and threats analysis. In terms of this company, in terms of its strengths, we're talking about diversified product portfolio. They have a strong brand. They have efficient operations. They have a robust distribution network, as well as a strong financial position. The weaknesses, they're primarily focused on the U.S. construction market. They have a heavy reliance on the U.S. government. They have high debt levels. They have environmental concerns and also challenges in consolidating acquisitions. Opportunities, structure spending, increasing demand for construction materials, international expansion, strategic acquisitions, and technology advancement. Threats, competition, regulatory risks, economic factors, and technological disruptions. Next slide, please. Now let's look at Marietta Materials in terms of valuation, future growth, past performance, financial health, dividends, management, and ownership by looking at the SSG. Next slide, please.
2 minutes, Armida, 2 minutes.
Thank you. We're looking at the SSG here, and you can see we're doing up, straight, and parallel. And the in terms of year over year, the company did very well, particularly in terms of earnings expansion. Next slide, please. And looking at the the valuation in terms of earnings per share, you can see that the 5-year average is at 22.4 and the current PE is at 27.9. It's currently in the hold zone with an upside downside. Here I have 1.9 to 1, but it's now currently 1.4 to 1 because of the increase in price since when I did this evaluation. And so the best buys price is at 481.20. And we're looking at, if you're looking at the ratios, you can see the relative value of 124.4. The valuation ratios are very high. Next slide, please. Okay, as you can see in terms of future growth and performance, they're still doing very well in terms of increasing year over year. The same way with price earnings ratio, you can see earnings per share has increased each year over the last 5 years. Next slide, please. In terms of financial health, it's a very strong company. They continue to pay dividends. They've been paying dividends consistently for the last 10 years. Stock ownership, it's current institutional ownership of the company is over 93%, with only less than 60%, less than 1% being held by insiders. Next slide, please. Management doing a great job in terms of pre-tax profit, in terms of return equity. Next slide, please. Conclusion. The stock is a hold with the upside downside ratio of 1.4 to 1. This company is a market leader. They have a strong track record. They enjoy strong pricing power. However, they have high valuations that create a very cautious environment in terms of investing in this particular company. They've been a long-term value creator, but right now they've got very high PEs, multiples that negate the value creation, and most of the analysts are mixed in terms of whether it's a buy or hold. Those analysts who think it's a buy look at future free cash flow, but right now the company has exceeded the U.S. stock market in performance, but they've underperformed basic materials compared to the industry average. And right now the PE, the company is overvalued by over about 40%. And that's it. Thank you.
All right, Susan, you're up, and I guess we need to unmute you.
Good afternoon, everyone. My name is Susan Tano, and tonight I'll be presenting the Pulte Group. Pulte, the ticker symbol is PHM. It's a very large company, and it's in the consumer cyclical sector, residential industry. Okay. The company is considered a home builder. A lot of its peers and competitors are things like Lennar, D.H. Horton. So, as you can see, it has some very large shoes that it's tracking behind. It ranks around number 3 in the group. Next slide. The company has multiple brands. They sell under the Centex, the Pulte Homes, Del Webb, which was news to me, Divasta, and some high-end homes called John Whelan Homes and Neighborhood. It also has the Pulte Mortgage Group, which they tend to service a lot of their own mortgages. Next slide, please. Pulte Homes Pulte Group was founded in 1950, where it delivered 775,000 homes throughout the United States. It began as a single home built by the hands of an entrepreneur called Bill Pulte, and it is now the nation's 3rd largest home builder and operations in over 40 major cities. Pulte Group has built a living laboratory right now. They are preparing for the next generation, the next phase of this environment, and they have gone into creating a community that is using forward-looking items such as going totally solar, that type of stuff. They have unveiled 2 model homes that they're not for sale, but they are using the latest advancements in technology to see how these homes are going to be received by the community. They've partnered with Ford in using EV as well. So, as I indicated, they are looking to be forward-thinking and trying to see how the new advancements in technology, AI, EV, solar, wind power is going to affect their environment, but also their business, which I happen to like. Next slide, please. Pulte also supports a lot of veterans. While they look to the bottom line, they also have a strong environment of giving back to the community by building by the program called Built to Honor, that gives back to the veterans that served, that they can do what they do. So they they donate 75 new homes to veterans and their families through the Built to Honor. And this is their way of giving back to the community. As an industry first leader, Pulte's Centex brand offers the new process called Transact Homes, which they do all of their everything online. So you don't go in to see a mortgage servicer. You do a lot of the work online. Fill out the forms, do everything online. So, but I think this is something that a lot of other communities, other home builders have been doing, especially in light of the recent medical environment that we've just come through. Next slide, please. Pulte is very selective in the areas that they attempt to build in so that they can offer an attractive property as well as an attractive community. So they are they have put careful thought and process into where they build and the communities that they stand up. They offer various floor plans, various designs, and office space. Next slide. As I indicated earlier, the financial home mortgage service continues to function and gives Pulte home buyers a quick and streamlined process for getting their mortgages while they continue to donate homes to military veterans. They also provide those homes through this Pulte home mortgage process. Pulte Homes is not a builder that you see at the front lines in most instances. They are very quiet. They tend to not be very high profile, but they get the job done. They are a steady grower. As I indicated, they're also in a cyclical industry. So you will see that later. But like with every other home builders, they're facing a lot of headwinds in their industry. COVID was one of them. Material price increase at one point in lumber skyrocketed. It has since come back from, the stratosphere back down to earth, but other products are doing the same thing. And from listening to a lot of home builders, even home remodelers, I'm hearing that there are a lot of products that it's very hard to attain. Next slide, please. Here we go on to visual analysis. Excuse me. As you can see, we are up straight and somewhat parallel. You'll see the last year we have been flattening out slightly. So you can see the cyclicality, not as pronounced here, but you can see that there is some cyclicality. We have done quite well with this company over the last couple of years. As you can see from the last price bar, the price is at the top of the 52, is at the 52-week high or close to it. So that's something that we would need to take into consideration. Historical sales and EPS has grown quite well. Sales has grown at about a clip of 12 to 13%. Earnings has grown about 32%. So you can see that earnings has been growing faster than sales. And you can see pre-tax profit has grown at about 21%. So based on this, the question is, does it meet the BI requirement to provide you with a doubling within the next 5 to 10 years? Next slide, please.
5 minutes, Susan, 5 minutes.
Thank you. Looking at the quarterly data, you can see that the rate of growth for the quarterly data has been slowing, especially the last several recent quarters. So that's also a sign, and that is a question that needs to be addressed. Next slide, please. Here is our quality analysis. As you can see, Pulte Group has done quite well for the most recent 5-year history. The 5-year average for pre-tax profit on sales is 17.9, but for the most recent year, it's way above that at 21.5%. Return on equity, the 5-year average is at 24, with the most recent year, 2023, going in at 25.2. And debt to capital, as you can see, the 5-year average debt has been 28%. And for 2023, the most recent debt is 19.7. This is indicating, as you can see, since 2019 especially, that debt has been steadily decreasing. The company has on track to retire a lot of their debt. So that's a good sign, especially for a capital-intensive company, to be able to manage and control their debt. Next slide, please. Contributing to this is the fact that Pulte Group is investing in its future by looking at what do they think is going to the future of their company, the future of their industry is going to look like, and attempting to explore those facts to see how they can benefit from it. They're using a lot of innovations, a lot of technological advances, and new home technologies. So I happen to like the fact that they are trying to see where they can grow the company and how they can grow the company and how homeowners are responding to that. So I happen to like that very much. Next slide, please. Okay, again, also providing their own home mortgage servicing, which makes it easy for new home buyers and even existing home buyers to go straight to them and not having to shop around for a mortgage. So that's one of the nice things that they offer it. But I think that can be a headwind as well, because if someone else is offering a lot better opportunity, I think people will, move to the new kid on the block. Next slide.
2 minutes, Susan, 2 minutes.
Okay, PE history for the company. As you can see, over the last several years, the PE has been decreasing, but the most recent year has a slight uptick in both high and low PEs. Moving on, next slide. The current PE is 5-year average is 6.6 and the current PE is 9.5, which indicates an overvaluation. As you can see from evaluating risk and reward, okay, what we looked at, you can, as I looked at this, I got this company in the hold range. It's an excellent company, but it is, for me, slightly overvalued. I would continue to watch it to see if I get another opportunity to enter. Next slide. Here's the 5-year potential. It's the upside downside is 0.3 to 1. Again, a very significant overvaluation here. Next slide. Value line is indicated. This stock is ranked 1 for timeliness, which is the highest in value line, but is trading at an astronomical PE, according to them, for that industry. And they think that the potential appreciation has already been baked into the stock price. So I think for them, they're suggesting to pass on this stock. Next slide, please. Here's the daily price chart, and you can see that the stock price has done a substantial increase over the last several years and months. Next slide. So in conclusion, Pulte is a large-sized, slow-growth company. It is well-managed, but it's overvalued, trading above its high PE. It has a nice dividend, but it's not above the 5-year average either. And that is my presentation. Thank you.
Unmuted.
Thank you, Susan. And we want to look at a recap, and we're going to turn it over to Kevin. Let's see. Let me get back here.
We're making this quick switch so that Cheryl will be able to upload the completed SSGs for everyone.
Yeah. And I'm making you the presenter, Kevin.
Okay. Can everyone see my screen?
Yes.
All right, I'm going to back
Yes.
up one just to make sure everyone can see it. So there's 91 and now 92. Is that what everyone is seeing?
That's correct.
Okay. So yeah, we went through things very quickly. So we always sort of like to ask all of our presenters to be able to sort of go back and give us sort of a summary and sort of where this company fits on the life cycle. So the life cycle is something that T. Rowe Price wrote about 80, 90 years ago, where he thought that corporations, sort of like individuals, sort of pass through a growth and maturity and a decadence phase. So what we want to do is we'll first go to Cynthia and tell us why you picked that location for Vertex.
Three reasons, actually. I would first say for its robust patents that it has around the treatments for CF, cystic fibrosis. The second one, I would say the projecting for the year 2024, they are looking at 10.7 billion, which is 8% over their oversupply, same period last year. And then the other thing I would say is the ample cash flow they have on hand that they're using for research and development for what's to come, what's in their pipeline. So on that one slide that I had that showed everything where they are, what's been approved and what they plan to do, the pipeline to include treatment for kidney disease, type 1 diabetes, and then of course commercializing their efforts that they're going to run into 2024 over Casgevy, CASEGEVY. That's why I put it there, where they still are in that explosive growth. They've been around, but they are still in that explosive growth. Thank you.
Okay, thank you. Greg, let's go to you and tell us why you picked that location for Intel, sort of right in the center of the mature growth.
I think Intel, thank you. I think Intel will continue to grow, but I think we want to see explosive growth. One, because they're really starting up in areas, and when we look at them in terms of Mobileye, in terms of their factory, where their two growth areas, those are very small numbers compared to the overall company's growth that it may experience in their customer computing sections. And also, we're beginning to see that they have some very strong competitors in the area. So it's going to be very tough for them to maintain their market share in the near future. I think they'll grow, but we won't see the kind of growth that we've seen, let's say, in the last 10 years.
Okay, thank you. Armida, tell us why you picked that location for Martin Marietta.
I picked this location because Martin Marietta is a large capitalization company, and therefore wouldn't expect explosive growth from this company. But I do see a large amount of growth due to the infrastructure that needs to be done here in the United States, and the management's ability to continue to expand the margins on the products that they sell. And it looks like with this growth strategy that management has in place, they've been very successful in providing large strides in terms of growing the company. And so I still expect it to continue to occur within the next 5 to 10 years.
Okay, thank you. And last but certainly not least, Susan, tell us about Pulte Homes and why you picked that location.
I picked that location for Pulte Homes because, as indicated with several of the other companies, it's a very large company. It's also in a very mature environment, and it's in a very, very mature industry. As we know, we don't have an unlimited supply of land to build on. We just have to reuse what we have. But I also think that the company is navigating this mature industry in a way that will help it continue to grow, but not as fast as other companies. This is a cyclical environment, it's a cyclical industry, and I think you're going to see growth spurts and then areas of what we will call stagnation. So I think it's in a very, very mature area, and I don't think it's going to grow as a very small and nimble company will do. So I don't think it's in the explosive growth phase, but I do think you can get some explosive growth for a period of time out of the company.
Okay, thank you very much. So that was a nice summary from everyone. Let's, Cheryl in the process has been able to upload the SSG. So if you go into the handout section now, you can be able to download the completed SSGs that we have up there. And so I'll take you to the next slide. So now that we've done all this, we want to be able to have you vote on it. And once we're done with this, we'll see if there are any questions in the audience. So Cheryl, do you want to release a poll?
I think I have to make myself the presenter.
Then go ahead and do it.
Back.
Go ahead.
Yep. All righty. And show my screen. Come on. There we go. Okay. Why is this not? Okay, it kind of froze up on me here. Hold on a second, I will get it to unfreeze.
In case people were wondering, we are not professionals. We do this just for fun.
Definitely not. We're also technologically challenged.
We all like to be able to show our own level of ignorance, and I do it every day at work.
Let me see if I can get it to launch.
There we go.
There we go.
Here we go.
So go ahead and vote, folks. You get to just vote once. It doesn't cost you anything. We'll see how it's going. About 50% of you voting, yeah.
Yeah, doing good. We're in the 70s. If we can get a few more, if voting is free.
I think it's good to sort of cut it off.
Yeah. Yep. and share. All right, it looks like Vertex is a clear winner here. Martin Marietta second, only did with 20%, almost 20%, but it is very clear that our audience liked Vertex Pharmaceutical. So I'm going to hide that. Let's see, we ended with, I think we're over here. Here we go. All right, here is a picture of most of our group here at the last Bink in Texas. And here also is the contacts for digging into the BI, also for the DC regional chapter and the Maryland chapter. Again, if you want to be able to get a hold of them by and do you want to talk to this, Kent, since this is usually your slide?
On the mailing list for the DC regional chapter?
Well, you don't have to be a member of DC chapter, but go ahead and sign up. Most of you are obviously do that. But I think it's the next slide is Kent's volunteer
you are
one.
right.
So
you are right. Sorry about that.
Let's go to the next one.
Here we go.
Oh yeah, that looks much better. Yes. So for those of you, as you may have figured out, we are all volunteers here, and we do this because we enjoy doing it. We also learn a lot, and we get better at honing our investing skills, but also our presentation as well as GoToWebinar skills. So if you're interested in volunteering, that would be great. One of the benefits that you get out of volunteering is some discounted rates for doing things like the Better Investing National Conference coming up in Chicago in May. You also get complimentary subscriptions to the tools that are on the Better Investing website. So we do encourage you, if you're interested in learning more, participating more, to give us a call or send us an email. Thanks. Next slide, please.
All right, so this was not changed. This was February. So do we have April up on there or not, Kevin? I'm thinking not. All right, we'll go to the dashboards. Stay tuned, though, and we will be discussing the April digging into the BI and the companies that we will be looking for at. And so just look for our emails, our interspires. This is the Manifest Investing dashboard, which is a public dashboard, so you don't have to be a member of Manifest Investing, which is a subscription program, to look at these different public dashboards. And on this next slide are the links to getting to those dashboards. So please feel free to take a look. We've got dashboards going back to 2021 through 2022 and 2023, and now we're putting up there for 2024.
Cheryl, though, let's go back to slide 98. Even though it says February on the top, it does show the featured stocks for next month.
April,
yeah. So you do see you got the semiconductor, that's an overseas one. Never heard of it. That's going to be interesting. And then Comcast will be the undervalued feature. And I think we have one of the other featured stocks, but I was running out of time, so it didn't get all put in there. There you go.
Alliant is the stock that I'm going to present in April. And then so we still have a room for one more. So if you're out there and you're a club and you want to advertise your club and you would like to do a presentation, please contact us and we'll do the emails again in a second. And visit us here on YouTube. Thank you for visiting, and I will go back to where we had the emails here. And these are the digging into the BI contact as well as the DC regional and the Maryland chapter. So please feel free to reach out to us and let us know how we're doing, or like I said, if you wish to advertise your club and want to do a presentation.
Cheryl, we do have some questions in there, so if people wanted to ask them. Kent, do you want to sort of read out the ones that seem the most appropriate?
Sure. Cynthia, there is a question about Vertex's stuff in the pipeline, and I guess Matt was wondering if there is a non-opioid painkiller in the Vertex pipeline, and what your thoughts are on that, if there is such a thing.
So I'm going to answer that loosely. Don't hold me and don't quote my words. In the reading that I was going through, again, I still am so interested, so I'm going to dig a little deeper. I did see information about opioid lists or non-opioid pain medicine. So they do have a large section and they're talking about acute pain and pain treatment without the opioid. I just didn't dig down deep enough, so I can't speak intelligently on it. But definitely dive into it, because I'm going to dive into it as well. They did mention something around that. I just can't say exactly what it was, but great question.
And actually, Greg, do you have an Intel SSG that you're going to put out there that we can put up?
Yeah, I just sent it to Kevin about 5 minutes ago.
I'm working on it right now as we're talking.
Okay, I'm going to stay on until that gets downloaded. So if you're waiting for that, please hang on and don't sign off yet. Any other questions? I'm going to go in and try to find. Have you sent it out yet, Kevin?
I'm working on it right now. If people just have to be patient, otherwise they can just reach out to the digging into the BI email address, and I will get it out to you.
Okay, let me put that back up again. And here we are. So here are the emails. Again, you can go to this digging into the BI contact, and I will be glad to respond to that and send you the intel. And so you don't have to hang on waiting for that. Anything else, Kent? So I'm not hearing anything from Kent, so I'm assuming there is nothing else at this point.
Yeah, sorry, wrong mouse.
No, that's okay.
Yeah, no, actually, I don't have anything else. I guess the only other question was about details for Armita's investment club, which we'll put out there as we get that. So, thanks.
Okay, those are in the general slides that we have already in the handout. So people can look at those slides, the PDF of all the slide deck, and it will be in there for the Armita's section.
And Cheryl, I just sent the completed SSG for Intel over to you.
Thank you.
So if you want to give, you can just do it as is. You'll be able to see how we work in the back. Were there any other questions, Kent, or was that, it looked like there were quite a few questions, or were they all pretty much more personally related?
Yeah, I think most of them were directed towards you. So I think it's all good. I think we're all good with questions.
I will see Intel. Oh, there it is.
You see the long, strange handout we have to do to get there. Goes from Greg to me to Cheryl. It's a long handoff. It's sort of like one of those 4x100 relays. Anyway, I think things are sort of breaking down, but again, thank you very much for being here. Cheryl, thank you for taking a lead on this stuff here. And again, thank you to Greg and Cynthia and Susan and Armida for doing presentations tonight. We thank you very much for helping us out. And we hope to see you next month on April Fools, April 1st, when we will be digging into the BI again. We'll keep, thank you all. But we'll keep this open.
Thank
So
you. Good night.
to get the intel, you can get that.
Yeah, I'm going to stay on for another minute. So if anybody wants to download, I'm giving you a little more time.
Thank you, everyone. And good night.
Thank you.
Cheryl. Cheryl.
Yes.
When are you going